Alrighty, daily trading recap for Wednesday, the 30th of March, 2022. To Christ be the glory, as always. NASDAQ, let's just get over some dollar volume first. $222 billion volume in the day as of 16 minutes after the close. NYSE $293 billion volume on the day. OTC's $1.8 billion volumes. Future strategy working nicely for the 9:30 market open. 2 points seeking above that open price strategy, working well there for the ES side, and then still in the MES contract sides for the full session day trade, looking for 10 points above the open. Didn't happen today, so it was a loser, but love a decision I made to just downsize my overall risk by using the MES contracts and not just trying to force it, even though it's 10 times more money to use the ES contracts, but the unrealized losses and when the loss days come, like even today's like this, even though it wasn't terrible, that we did recover pretty nicely off of the little low there. Yeah, it's just those big numbers just for the account size that I have right now. Unsustainable to continue that practice with that big of a position size on ES contracts. So still factoring that into the overall hit rate and consistency of the trade of what it will continue to produce. If it is still a viable strategy, it's always continually being updated. And the thought, of course, comes to my mind of in doing these strategies and finding the back testing data and matching that with history, and then see if we can apply that to the future or any other parameters to define how we can further refine and pump up the jam on this trade. It's weird to think, okay, well, would this strategy then be disproven? And it's just like with all of these, it's almost going to have to come at the expense of me just continually taking sustained losses to then get hit in the face to realize, okay, maybe this strategy is not working anymore. Or, obviously, backtested data does not predict the future. Past performance is not indicative of future performance. That's the quote that I was looking for. But of when would obviously I can just try to fine tune and find all these specific parameters to set for when would this specific strategy or how would it have worked best in the most recent years. But then of going forward to say, okay, well, nothing says that has to happen exactly for when it continues on for these automated algorithmic strategies. But yeah, I'm along those same lines of, okay, then when would it be disproven to say, okay, I should stop doing this strategy because it's just not working? That would only really come after me just taking consecutive loss and loss and loss and loss, or like I've screwed myself in before of just wiping out my account by taking a stupid loss that I wasn't correctly sized and proportionate for. But yeah, just thinking on that of, okay, yeah, I like these automated strategies and setups of me not having to push buttons and making money. I certainly like that, but when does it become okay, this strategy isn't working as great, let's adjust it or move on to something else, or let's stop it entirely, or let's do something else along those lines, but not the same. Interesting dilemma with that continuing to wriggle with. Also, just wrote my introduction little journal here for how I'm just continuing to, the mentality always is to push more failure, to seek out more, okay, where can I go lose money more? Where can I just continue to fail, pile on the failure? Lost. Where can I just find if I find a successful strategy, okay, where can I push that harder to find all the loopholes in it and further bolster that strategy? And then the same mentality with myself of, okay, what am I looking at incorrectly? How can I change that? And just continuing to pressurize it so that it has to find all the weak spots and weak points. But then thinking about that of, it directly correlated to IGMS today of like this trade I was thinking of here. I usually would try to just push ideas. If I ever, looking at a chart and I think of an idea of, I think it's holding it pretty well here, maybe it could go up. Like just that basic rudimentary of a thought process on any chart or any different type of pattern that I was seeing. That was then the mentality of, okay, play it. Go on that idea and test that thought to see if there is any validity to it as a trade. And for how many times I've done that and then tried to adjust my size or keep small size because it's maybe not as a convicted of an idea, or maybe not as of a well thought out of an idea, or even vice versa, that I've screwed myself over of thinking that I'm well thought out into an idea and putting huge size on it, but then not respecting the actual risk reward of the trade itself and then getting screwed to the downside when inevitably it goes against me. That's the thing that I haven't been figuring in to the equation first and foremost, is that risk reward. So specifically for IGMS, okay, we're in a second day move here after that crazy little first day. Little dip, little rip out of the open, but it's second day, not anywhere near the same type of volume that it was producing yesterday. Not expecting much out of it today. Not expecting a crazy move, not looking for a retest of 36 here today. But even in this rest and little consolidation, maybe a trade, the thought comes to my mind, okay, maybe there's a little bit of trade here for how it's holding, clinging to the underside of VWAP, not really going crazy, but just to maybe could establish a long position here and hold for something. Maybe we sell off or hold around $28 here, but maybe swinging a position into tomorrow for any third day surge play or any move in after hours or just kind of craziness, sketchiness going that way. But then, that obvious voice, not the obvious voice, but the voice now that clicks in to say, okay, well, what's the risk reward on that trade? You've identified and said, okay, you've had an idea that says, okay, maybe we could play a long position here based off of whatever you just identified. Okay, hey, it's holding, put in a little low here and it's failing to break this $28 level. Maybe you could establish a little position there. Okay, what's your risk going to be? Well, I could risk a low day, and that's obviously an entire dollar at least, minimum, or for wherever I was getting an entry, over $1.50. Okay, well, are you thinking that what's the probability that you think that's going to happen? This trade is going to hit profitability, and what's your profit target? First off, do you think it's going to hit $30? Is $30 your profit target? It's $32. And I could say, okay, well, if I'm holding it to tomorrow, I can maybe see it going to 34. Maybe we don't even get to a new high of day, but 35 becomes a level that it tests and bounces up there, and then whatever it wants to do. Even using that as a profit target, underestimating what it could potentially do if it started to reclaim once again for how crazy it moved on that first day. Okay, so we've defined risk-reward parameters there. Now, what's the probability of conviction that you feel on that trade? And what type of size you're going to be willing to take on that? Because now, if the probability, like it showed today, of this is the type of price action that it was destined to do, is just break that low of day, obviously collect a lot more people who were also maybe anticipating something similar to that. Not an insane amount, but that's where price went because obviously orders were there. It wouldn't go there if the bulk of the orders weren't there. So then in that thought process of, okay, obviously there wasn't a huge probability of that happening. Now you got to factor that into the overall risk reward on the trade of, it goes along with the same mentality for these algorithmic automated trades that I do of, I was just so pursuant to high hit rate. I just fell in love with, oh my gosh, it's a 99% winner. I have to be doing this right now with every single dollar that I have to my name. Like, I got to be playing this strategy right now. But then not realizing or taking into account, okay, well, what happens on that one time that it is a loser? What happens when you have to factor that into your overall net profit on the trade? And sure enough, when that one loser becomes account destruction nuclear bomb, okay, yeah, maybe this strategy isn't as viable as we once thought. So then taking that same mentality and applying it to not only what I want to do with my trade ideas and experimentation, but using it for that, actually putting on a trade to say, it's no longer going to be, okay, I have formulated an idea and a hypothesis. I'm going to test said hypothesis and kind of just for how many stupid ideas and hypotheses I have, but that's why we're testing them. But then immediately going to it and saying, okay, sweet, I had this idea. I'm going to take, and I could totally have seen myself taking 1 share, 2 shares around this little price range here, or anywhere from around 11 o'clock to 1 o'clock here, around there, as it's holding this little range during lunch. And saying, okay, I'm playing this idea. And then while I'm sitting in that position, then having to realize, okay, I really did not do any factoring in for what I could see the potential risk being in this one. I know it would obviously be, I could just so very easily say after the fact that, oh, it would just be low of day, right? Of just risking that. If it hits there, then obviously the trade's just not going to work. But even on that, not factoring in, well, what's the probability that I think it's actually going to happen? And if I do have a high enough conviction that it's actually going to happen, why am I taking 2 shares? It's very illogical in a lot of ways of how I perceive right now this experimentation, a little educational, how I'm going to take very, very small position sizes. And I think that's definitely, my approach to that has definitely got to change because it's not serving me any good. It's not an educational, I can convince myself and say, oh, because it is a $2 loss, a $3 loss that I take on these super, super small position sizes. It wasn't like it was going to be a good risk reward trade. Either way, maybe this would one have been this, whatever this example was. But for these other ones that are taking these stupid little trades, and I want to say stupid little trades, but that's always where my mind goes, of course. Is even when I have like 5 winners on the day, whatever, if there's one terrible loser, that's of course always naturally where the mind is going to go, like, okay, well, why was this one a loser? Why couldn't we make all of them winners? And just understanding and dealing with myself again in that of, I'm human, I'm going to make mistakes. But my mind goes to the example too of, I think it was a Gary Vaynerchuk quote of just whether you're a CEO, business person, and even in the realm of trading, what I want to pursue more is just to have like that circus act of so many plates spinning on top of the little sticks and the poles, that when one of them falls off and crashes and breaks, I've got 38 other ones still spinning and going that I'm managing. It's sad and it's frustrating that the one has fallen, but there's still so much more and a reason to just continue to keep going with all these other things. And it's not saying that I'm trying to overload my life now. I needed to be doing more things, but just to not be so at the whim of, I'm only taking one good trade today, or not, better phrasing it, of, oh, this one trade today, it's going to define who I am as a trader today. It's just illogical and not serving anyone well. And it's just not a way to grow, of trying to, I think I just look at it as I'm still in this educational sphere and where my account and trading career is at the moment, it's certainly got to be more than just what I'm continuing to do right now. And it's just that weird line of, trusting the process, not the profits, or not just pursuing money right now. It's got to trust the process, but then of understanding, okay, I'm trusting the process, but at some point it's also got to say, okay, my process, the process at which I'm going right now, I'm still in this state. So do I still trust this process, or do I actually have to change this process in order to continue to get somewhere? Like that type of dilemma. But I'm just glad to be talking about it and becoming self-aware of it more and more, and just losing my own bias and ego of what I'm staring at, and especially as I come to the markets in after hours, in pre-market preparation, and outside of actual trading, to just cleanse my palate and my own understanding and biases and misleadings about what I'm actually seeing, and just looking at how can I pull money out of these charts today. Just breaking it down to that basic level again and again of, there's so many different ways that we can get wrapped up in this and there's always going to be opportunity to make money. And that's just the hardest part of always seeing other people make money. And, well, I know I could do that. Well, I know I could also do that. Okay, that's a cool pattern. Well, I know I could also do that. Trying to stretch myself too far, of trying to hold too many plates up on the little posts in that way. But it certainly is a process of defining that process itself too. And I'm all here for it and absolutely thankful for it. So that was a long-winded introduction there, 13 minutes. I'll start off with DATS. Nice little trader that I had starting in on yesterday. Going off of that introduction, I don't want to say that this one was an example of that I just had a trade idea, because, and I could say that it kind of was, of the, okay, it's coming into third day, surge potential tomorrow. I don't feel comfortable taking a big position size overnight on this ticker. I don't think it's any crazy dilution or anything sketchy. Of course, these are all sketchy companies, but us in the same way of, I don't have that huge of a paper chart trail to say that, to point to say, hey, this specific chart with these exact specific parameters also did a similar thing for its third day play overnight going into that day tomorrow. But that's kind of what the chart ended up being today that came into my mind of, this is why I protected myself of establishing this entry at the close of yesterday. Fearing is the word that I was going to say, but just of thinking that price could move potentially higher and not really allow a great enough opportunity to find any entry in pre-market or during that first few minutes of market open the following day. So sure enough, it worked out pretty beautifully today, and I just can knock myself and say that I'm angry that I didn't have a bigger position size, but I would not have seen myself being willing for where I was at yesterday. I'm just not having that huge amount of chart collections to point to and say specific recent movers to say, this is why I'm taking this trade, because movers are moving like this, and this chart has proven that it can do it that way. This chart has proven it can do this way. My risk, obviously, it could just go to $0. It could stop trading. That's obviously a risk in anything, of trading anything overnight, or just could dump, throw out an offering, whatever. But in the same regard of, I think there's a lot of factors going to the other side of that argument to say that it could move higher and not allow me to establish a better price entry fill before any potential move or third day surginess coming into market hours today. So pretty lackluster volume in regards to what it did on that first day, but price is still the only thing that pays, and that's what we were able to profit off of. 255 was my initial entry, getting in just randomly at the close there. Selling into that first little surge. It was moving kind of rapidly, not on huge volume, but like these are what I'm talking about, of just trying to avoid this, as I would be watching this chart like a hawk in pre-market coming into today. Had I not had a position on it, then seeing this move there, and it'll be just like, gosh, okay, it's already moving again, and it didn't really give any huge indication of it, but now price is already sitting here. At this point, it could have been in here, blah, blah, blah. It is the FOMO. It is the just those little self-doubt takers, and then just constantly putting me on edge of like, okay, should have been in it there, or could have been in it there. Okay, is there going to be a better entry point? I still think there's potential in it, but is this a good entry point still? Is it a good entry point still? Regardless of still in my position, viewing it as if I was holding a decent enough position to carry through that exercise, selling a little bit into that first minute candle, just as I want to say protection, because that's the word that comes to my mind, but okay, here's dollar volume, here is volume coming in on that first minute candle. Let's see if that becomes the high of day. If that becomes the only opportunity to be selling into, I want to take at least a little bit off into here at a decent price. I think I actually had a limit order in at 2.8, looking for price to move into there, but it just barely skipped me for that first half or maybe quarter of position. So I ended up kind of chasing it a little bit to the downside, selling that first half closer to 275-ish. Sold off below VWAP, but based at 265. Huge bounce off of there to new market hours high of day. Selling into strike there around 285 for that second exit. Scalping, paying myself along the way. Still great exits in regards to where my initial entry was. But yeah, just now, okay, playing the chart. What do I still believe the potential is there? Leaving a few on for certain. Obviously looking for the magnet of that $3 whole dollar level that it played off of perfectly for that morning session. So getting able to have a sell into there, and how tempting it was for me to try and push that trigger just a little bit earlier, trying to chase a little bit under 295. As it was failing, we got to a high of, what was this candle saying? 298 that we're tapping. And as I'm watching it, just going, okay, still have my limit order in at 299. I'm not going to be setting it anywhere ever really at a whole dollar number, but putting it 1 cent below. Gosh, it just skipped it by missed it by 1 cent, pulling off of there. But it was so minimal of a position size for so little shares. I just said I have to be testing this. I have to choose curiosity over anxiety. I can't be chasing into weakness. This was also a huge volume candle as well. So that same thing of, okay, was that disobedient of me to not be selling into strength? Okay, let's roll the dice. Let's see what she wants to do from here. VWAP is holding pretty nicely to where our price action is moving right now. Let's see if we can just get a little bit more perky. Maybe we get some more craziness to the upside of $3 here. Still keeping that limit order there, but sure enough, it just tapped perfectly off of there. Rebounded off of that to VWAP, played around a little bit, and then broke eventually down to the downside of 285, and just death and destruction on it for the rest of the day there for the third day surge. So, yeah, I can't say that I've seen a lot of charts similar to this for a third day surge, but this is the type of chart, 100% of in past collections that I've seen for potential, that this is the reason why I would take a position on this chart overnight, of not being able to really establish a good position based on any type of level 2 or technical analysis there, time and sales in pre-market, or even as we get into market hours of, okay, yeah, you can say that as it dipped there and started holding VWAP, of maybe if you're reading volume coming in to play off of that candle, that could be a potential entry. I see it as less probable and less likely, especially for me right now, to be able to recognize that and be a part of it. But that's not to say that I couldn't develop that skill more in the future. But yeah, certainly to give a grade for the trade idea, yeah, I got to give it an A. Execution-wise, I think absolutely nailing the top there, getting a sale at one, if it topped at 301 or something, whatever. Pretty much nailing these little peaks and opportunities to be able to sell into. Got to give myself an A in that regard too. And this brings up the point of, make this video super long, but of bringing up the point of, okay, what then obviously I want to be selling more shares into that $3 range as compared to just slowly scalping out along the way. But that's just a inbred strategy that's just become a part of me since Tim Gertani, of using that as a motive for being comfortable still in the trade and not just trying to force more out of it than is actually there. But then it brings up the unfortunate side of it to what my actual, I couldn't tell you what 2.5 to 3 is, what this actual move was from my entry to the last exit. I'm going to calculate that quick. Okay, so of a full 17% move, that would be from 3 to 2.55, whatever. That would have been less, 2.53. Pulling 10% out of it, certainly can't knock that, but that's 7% more that was still left in it. And that's another entire trade in itself, a 7% profit. That's beautiful. That is 2 losses to be able to cover from there. So it's great trade, great opportunity, great to be a part of. But still, I think lots of lessons to learn from. And gosh, yeah, of just how can we milk these more for what they're actually worth, what they're providing, instead of kind of cutting it short. Because then it's just unfortunate of when I do take the losers that now if I had pulled it for a 17% trade and now I take 2 more stabs like I did on NAOV and VEON of those 2%, 3% losses, those come in to cancel out. I'm still up 11%, 12%. If that math's right. Quick math. As compared to now, if I was trading, of course, this is just an example of if I was trading every trade with the exact same position size, now just looking at raw percentage pulls off of these trades, now I'm down to only 4%, 5% win on the day versus just pulling out that much more. So it's nitpicky. I think it's just something to be addressed. I don't think it's anything against me or just a bad habit of what I'm doing, but certainly for what, and I think it's more so too for the specific strategy in itself of when to be paying myself, when to be actually looking for an exit on these types of trades, but just continuing to push that line and become more self-aware and being able to milk it for as much as it is really worth. VEON, I started in on yesterday, still had 100 shares lingering, looking for this multi-day little breakout, higher of a float, sub-dollar ticker as well. And that was just the thing that was hitching me from not taking an even larger, huge position size on this trade was just that higher float, no real insane, awesome volume on the day. Volume on the day was just short of $10 million traded. It's not anything to bat an eye at, but yeah, just not monumental. And I think just of lots of other tickers, of the memers coming back a little bit too, I think maybe more so a distraction of not having to be one of the only things that's out there that would draw more attention to it. But regardless, I digress. Originally my risk yesterday was that low of day on that 100 shares, risking $5 for that 100 shares that I had. I'm continuing with the mentality in the after hours yesterday and a little bit in pre-market today of, okay, yeah, I'm still thinking of risking that low but sure enough, if it's starting to break down to 6.8, I mean, that's the basis for what you define your risk as, right? Is the trade should not go here if it's going to work out the way I think it should. So if it goes to this price, then it's doing something different than my original intention with the trade was. So that's what just I came to in the realization of, okay, the 68 level, if it's just failing to really continue to hold, maybe it does it. Maybe we get an actual breakout above that recent high there, above 77-ish, or even 75 here, like off of yesterday. Maybe that comes in 2-3 days down the road, but it's just not going to happen right now. So that's what I was really protecting myself against, and that's what that initial trade was to be, for this trade to happen within 1 to 2 days from yesterday. Of maybe if we held a little bit today, just still didn't get the volume or have the legs for it to go today, but maybe tomorrow develops into something. That was what the trade was going to be, but just did not happen. It was looking a little bit too weak for me to just feel convinced that a breakout potential was still potentially going to happen to that 75 level, to that 77-cent level either. So we'll continue watching and see if I'm proven wrong there and I cut my risk a little bit too short. Could have, would have, should have still maintained it at that original 65 low day level on that first day, or on yesterday, Tuesday. But yeah, we'll certainly keep watching it. And yeah, I wrote in my journal here too, just crazy to see there was pretty large bid at 70 cents. I think that was just absolutely smacked, taken out within that first little few minutes of market open. And yeah, very wide spread in pre-market too, of thinking, oh, hey, sweet, it's sitting at 71 cents, it's sitting at where my entry's at, but then realizing, oh, okay, yeah, the bid is sub 70, so it's not like it's actually there. So just realizing that in every factor there. SNOA, what I want to talk about, I did not trade this one, but just of, I don't think I talk enough about of the non-trigger pulls of this one potentially could have been, and there's obviously still spots to make money, maybe even playing off of this little double bottom here, finding an entry, even a little tiny entry from able to get filled around 385-ish, anywhere around there, selling in just short of VWAP into 4-1, 4-1-2. I mean, that's not a trade to knock. That's not a trade that's, hey, that's decent. Okay, it's not anything to make an entire career out of, but it's certainly a trade. And those are the types of little lines that I get caught up in of, okay, is this a trade that's really worth pursuing with my time, for how valuable my time and my eyesight and energy is of pursuing specific charts? I can only have so many charts up on the day. Is this specific chart worth pursuing for what it was of American Pharmaceutical, super low float? Their news catalyst was a new UTI product. Warrants exercisable at $9. They had an HC Wainwright at the money. Also got a shelf from 2020 of December still. I did play it in September of 2021 and also August 19th of 2021. But of course, this was nowhere near the volume that it was having on those days. So trying to factor all those things in to say, would this be one that could be a potential dip and rip candidate? Could it develop into a little bit something, even at this level here, just after the 945 level, as it's still holding that 3.8? Okay, could we see a little basing here and then maybe a curl back up to $4 range or to VWAP range there? But just of, I think a little bit similar to IGMS of keeping in mind, is this a substantial trade? Is this something actually worth pursuing? I can have the idea, that's great to identify it and say, okay, this could do that. And I got to get more in the habit too of, okay, I'm identifying this trade and it could do that. And if it goes and does that, great, awesome. I'm going to have that so many more times in my trading career, but I can't get so caught up in, shoot, why did I not take a position? I think it's just going to happen. If it starts to happen way, 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 way too many times, then obviously, yeah, I can kick myself for that. But I've got to be able to live with and deal with being able to have a trade idea, whatever it is, think it, and then say, you know what, yeah, on second thought, or just diving a little bit deeper into the actual nitty-gritty of what the trade would be, I don't feel convicted enough to actually take it, and being able to be fine with that. And how many times, how much more so do the ones that get away, those FOMO ones that, oh gosh, why did I not act on that trade? How much more emphasis are those put on our brain versus the ones that don't end up working out? That, okay, yeah, I'm glad I actually didn't take that trade. It went entirely against what I thought it was going to do. So those aren't really I have to factor that in as well, that it is a little biased that way. That same mindset there. So then I'll finish up quick here with NAOV. Did also take this one. Took it inappropriately, an inappropriate time for what the trade could have been. And I just want to go into highlight hard what a awesome opportunity that this little rejection candle was here, this doji at 954. I think I'll talk on the trade that I took first. Trying to make it this trade of, I was watching both, I think it was SNOA and NAOV at the same time, of within the first few minutes of market open, that these sometimes can just get these quick little spikes. And I think that's what most people look for, and what I should potentially start looking for as well, of these spikes to start shorting into. What I should start looking for again, of these shorts, little spikes to short into, looking for quick downside there, but in the same regard of also looking for quick upside scalping potential as well. And it pains me. I don't necessarily say that I want to be that type of trader or that type of mindset of finding this, okay, first minute green candle, putting in some decent volume, second candle, not breaking the low of that candle, still under VWAP, but pushing price a little bit higher to the underside of VWAP there. Okay, we're getting a little bit of strength here. Playing for identifying an entry around anywhere around 115 here, 116-ish, and playing for a very quick scalp to 122, 125 even, of being able to take it all the way to there. For that type of very, very quick scalp, not expecting anything insane or crazy about it, but yeah, I just don't know why that, I dislike or don't want to be a part of that style of trade. Maybe because it's, I know that I would have to take a lower hit rate on those style of trades, similar to how of a picking top style of trade for a short, of shorting into these morning spikes or identifying some random arbitrary level. Most times, obviously, there's other times that other technical levels can be identified there, but in the same light of, gosh, sometimes it's going to have to be a little bit lower of a hit rate style of playbook trade, but when they're able to be found, the risk reward on those is just awesome compared to what I was trying to take these as. And that's what I tried to convince myself was this same trade here of, okay, yeah, we're a little double bottom here. We're failing to break to new lows, especially off of pre-market, off of that 110 level. We're holding to the underside of VWAP. It's faking out and testing like, oh, we're not able to get to the upside of VWAP here. That's going to attract more shorts in. They're going to want to play it to the downside. I get a little entry around 116-ish. I think just under a few cents under there, or a few microcents under. But then sure enough, that's the exact candle that it just starts wiping down and breaks to new low 2 minutes after I get my entry. Okay, I was just totally looking at something widely different, and that was not the area to be playing that type of trade. That was just totally incorrect and not the same pattern at all as what this little move was. Learning from that, growing and adjusting, saying, okay, that is not a substantial base trade for how many times I've alluded to that in this video already. But then of going off of this entire block here, taking it from 136, or we'll take it from 955 to 1010 time frame. That type of price action and trading is substantial one good trades of understanding and recognizing, okay, we put in a base here, call it a quad candle bottom just above 1075 there, it looks like. Breaks to a new low, collects all the stops of the longs that were playing off of that, but then dojis and rebalances itself. Second candle also maintains that same quad candle low there, around there, continues to build, test this little previous regional high at 113 that was, and then just break to the upside of VWAP there. What a beautiful, even getting an entry a little bit later off of that doji and finding it in this doji here of 957. Getting an entry there, playing for this type of price move. Beautiful little trade in itself there, and risking, still maintain that same risk of, okay, if it dojied here, but bounced off of there, failed to actually fully substantially break to the downside, okay, I can use that as a substantial risk level or barometer for gauging, okay, it doesn't want to keep going down. Let's see if we can attract in a few more shorts and a few more weak-minded shorts and scalp this thing to a new VWAP level, not looking for a new high of day, not looking for this thing to go to $20, but just looking for this little scalping move here. Beautiful little trade in itself. And then I don't want to categorize both of these moves as the same trade, because then that would be, I think, disrupting what the reason for the trade is in itself, of taking this first little scalp and saying, okay, sweet, awesome. You know, it did break to another high off of that little second candle pullback after the initial little first candle break above VWAP there. But that's really the trade in my book. And then as it just continues to develop, puts in 4 or 5 more minutes after that, that it's still really failing. Tried again to get to the underside of VWAP here, but failing. And then now as we see volume coming in, sure enough, beautiful, another block of even getting in around 122, selling into strength above 132. Beautiful trade opportunity on that, of 2 different little opportunities, all categorized and all substance-based, and then, of course, bleeding into the skills and factors of reading level 2 time and sales, of knowing when these harsher, quicker moves are potentially going to happen and being ready to already be in before that or play them as they're already happening, which is, of course, a challenge in itself. But then as these 3 candles following that show that is the move. Trying to force more out of it is just so worthless, of thinking that just forcing more out of it than is actually there, how much of a death sentence that is, and just taking the single as it's there. Take the money when you can, not when you have to. If I've bleed in, kind of blurring the lines to what I mentioned with DATS, of expecting what type of trade to be looking for. And gosh, I'm really identifying this key level, that $3 whole dollar level on DATS itself, but then on NAOV itself, but recognizing, okay, what am I actually looking for? And if time and time again that I'm cutting my profits short, that by 7%, by 8%, like similar on DATS, okay, then we maybe got to do something different. But on charts like this of NAOV, if I'm taking 2 trades similar to this, and of course hindsight is perfect 2020, but I'm taking 2 perfect trades like this and nailing just quick little scalps. Obviously, I'm not going to nail the perfect bottom and the perfect top, but taking quick little moves there, I can't knock myself whatsoever for that, of just taking the money as it's there, and for how quickly that was reflected, that as surefire as it was that you were in the money and in your profit target and everything was euphoric and awesome, how quickly things can just evaporate before your eyes and be blown past you before you even realize it. So that is all that I had on the day. It's a little bit longer of a video, but glad to be able to get that off my chest and have this avenue to be able to express that and just continue to engorge myself in with what I'm doing and becoming self-aware and talking about everything I'm seeing. It is quite the journey. I'm continually excited to just continue to get after it day by day. And I sincerely thank you guys for watching. We will catch you guys on the next one.